If you do not understand credit cards, it is better to not use the credit card. You could either be informed in terms of credit card best practices or uninformed or informed. And this is precisely why you're going to find that great minds like Dave Ramsey would say to you, stay away from credit. I support Dave Ramsey from the perspective that if you do not understand the entire fundamentals of credit, you should stay away from it. You see, credit card leverage is not for the novice. You need to have critical information about credit and how to leverage credit and how to mitigate credit. Today, what I will do, I will walk you through a step by step process that will help you to understand credit card and APR, the annual percentage rate. And over the next series, I will be talking to you a whole lot about things to ensure that you're informed about credit card. We started off this program by looking at ways in which you need to prepare yourself to start accessing credit. And in my last program, I also looked at the credit card fundamentals. So if you have missed those programs, I want to encourage you to go back and look at those programs, so you have a much clearer idea in terms of what I'm talking about. And on this program, Cracking the Wealth Code and Filling the Wealth Gap, we are going to be doing so much of deep dive into financial instruments. For example, we're going to be talking about debt, equity, credit. We will be talking about hard money lending and creative financing. And we will associate all of these financial instruments to you in business, to you in investment, and to you and your desire to build wealth. There's so much that you need to understand when you are taking that step to build wealth. And just before I start today's program, I want to re-emphasize, if you do not understand credit card fundamentals, you need to stay away from credit, because instead of you leveraging credit to build wealth, you're going to be digging a hole much deeper into debt that can trap you into a life of poverty. And that's the last place you want to be trapped. So, of course, if you're going to buy debt, there's a couple of things that you want to take the time to understand. And that concept is what we call the annual percentage rate. What exactly is the annual percentage rate? And today I'm going to be brief, but I'm going to go into this so as to ensure that at the end of this program, you have an idea in terms of what you're doing. Now, look at this. As you look at the screen, I have developed a list of things here that I want you to pay attention to. For example, you have the credit limit. I'll explain that is. You have things like the balance, APR 18%. You have the annual APR, annual percentage rate. You have the monthly APR, and you have the 0% APR credit leverage. The credit leverage is a hack, and I promise you I will give you some aspect of that hack. So at the end of the day, whether you're taking credit at 18% or at 36%, when you understand the hack, accessing credit and leveraging credit, you're able to do this at 0% APR. So let's dive into this right now. Now, let us suppose that you take out a line of credit. Now, credit is monies that you're going to be borrowing. Credit is a line of credit. You have the credit card. And in this case, we're saying that your credit card has 100,000 Ks. Now, those are monies that are available to you. And one of the challenges about all of this is that when you're taking credit, in most cases, you're leveraging credit as a liability as against leveraging credit as an asset. We'll go into all of that later on. Now, you have a credit line of 100 Ks and you have a balance of $10,000. Now, this is when I say balance, if you looked at the previous program, I did talk about outstanding balance and remaining balance. In this case, we are looking at the outstanding balance. This means that you owed 10% on that line of credit that you have. That's a good thing because this is showing that your utilization here is below 33%. 33% is a 30% is an important number for you to take note of. We look at all of that as time progresses. So your APR on the balance outstanding is 18%. Now, what this means is that you owe $10,000 and the annual percentage rate on this is 18%. Now, the APR is the total sum of money that is owed and the cost for borrowing that sum of money over a 1 year period. So 18% of $10,000, and if you look at the maths, you will see it. I've worked all of that out for you. It will be $1,800. And $1,800 is a lot of money. But let's go into this because we need to break this down further. You have the annual APR and you have the monthly APR. So the total APR divided by 12 equals $150, and that becomes now your monthly APR. Now, in most cases, this is a simple presentation of how to assess your APR because in looking at this, it is very clear that on a monthly basis, you know that if you owe a balance, if you have a balance outstanding of $10,000, the monthly APR on this is $150. Now, to the average person, you might want to say, well, I could afford $150. I mean, because you can afford it. But if you're taking this from, let us suppose it is your primary source of income, and you leverage this $10,000 into liabilities, that's a foolish way in leveraging debt. It's an absolutely foolish way in leveraging debt. You want to be smarter than this. And exactly those are the reasons why we're doing these programs. So if even you're going to leverage debt, you want to ensure that that debt is being leveraged in a way that is giving you some positive return so you're not going into your primary source of income. This platform here is all about showing you ways to crack the wealth code and to fill the wealth gap. So I'm going to quickly go through this and then I'm going to talk about 0% APR credit leverage. So the quick note here is that you have access to capital, 100Ks. Now you owe a debt. You have an outstanding balance, a balance due on this sum of $10,000, and the annual percent APR is 18%. You need to check your APR at all time. When you're going to take debt, know your APR. And it's important to understand the cost of the debt. It is the APR that is really giving you the total cost of that debt. And you need to know it. And what we're seeing is that many persons, guess what? You know that you want the money, you get access to the money, and when you get that money, you struggle to reach your monthly debt obligation. This for us is very important and serious business because we have in excess of 90 million persons in the United States of America that need financial advice, that need debt mitigation support and services so they can get out of debt, so they can reduce their stress, so they can sleep well at night. I know this because I with these people all the time. And the reason we are designing these programs is to speak to these issues in a manner that really help people to rise above these challenges. Stay away from debt and credit, as Dave Ramsey would say, in my case, if you don't understand what you're doing. On the flip side of this, I want to say to you that when you understand debt and credit and how the system works, you want to leverage it for every single thing that it has. And here's where I know that myself and Dave Ram disagree. I don't have a problem with that. All right. I support him to the point that he says stay away from debt if you don't know what you're doing. But if you know what you're doing, you need to milk debt and credit for everything that it has. Now, what I'm going to attempt to do is to give you a hack. Now, what if you could have access credit and leverage credit the right way into income producing asset? Income producing asset that can possibly give you daily cash flow, give you weekly cash flow, and give you monthly cash flow. What if this is how you are leveraging credit? This is a smart way in which you leverage credit. But of course, it's not only about doing the front end analytics, meaning that you are seeing an investment possibilities and you're making an emotional investment decision. That's the last thing that you want. You want to be making an objective investment decision. That means that you're doing both front end and back end analytics, and you're allowing the important market data, the important market indicators and drivers to inform your investment decision. Now, in most cases, most of you do not have all of this kind of information to make an informed investment decision. You don't have the kind and right information to start to buy, leverage, and mitigate debt. Those are important things for you to understand when you're getting into debt and debt leverage and debt mitigation. You want to take the time to understand everything that I'm talking about. Now, I have mentioned a whole lot of things in the my last two programs. So I want to encourage you to take some time out and look back at those two programs. I talk about one, how to prepare yourself to access credit, and I talked about two, the last two programs, credit card fundamentals. And I want to encourage you to go back to that because what I'm about to talk about right now, it's that information will help you to understand it. I did spoke about the what I'm going to be talking about now is 0% APR credit card leverage. Now, let me emphasize this a little bit for you. Regardless of how high the interest rate is, whether the interest rate is 18%, 20%, 36%, or 60%, when you understand credit card fundamental, APR do not have a hold on you. But you have to be very disciplined. You have to understand the right economic indicators. You have to understand the market accommodators and the market enablers that are informing your investment decision, that are informing your capital leverage position. And just let me go in here a little bit. In the credit card fundamental, we talk about a number of important concepts. And one of those concepts that we talk about, we did talk about the billing cycle. And as we looked at the billing cycle, we talk about the open and close debt. And I'm just going to go in here just a little bit. When it comes to leveraging credit cards, your understanding of the open and close date is so fundamental. It's so fundamental. And the open and close date tells you when you can start to spend. Three things it tells you: when to start spending, when to stop spending, and when to replenish the account down to 29%. And if you're disciplined enough to take this bit of information and leverage this bit of information, it will help you tremendously in your ability to navigate credit. to the point where you're able to access credit at 0% APR regardless of the interest rate. So there's a couple of things that I'm going to say here. You need to understand the billing cycle, and you need to understand the due date. And there's a couple of things that you need to do between this period. One, you need to bring down your utilization below 30%. And there are reasons why I'm saying this. In my next broadcast, as I go into the credit card builders, those factors that influences whether you build or break your credit score, I will better explain all of this to you. But you need to understand these three things about your billing cycle: the open date, the close date, and the exact period that you need to bring down your credit utilization below 30%. All right. And the remaining balance, you want to bring it down to zero by the time you get to your due date. Now, this is a hack. And if you clearly understand what I'm saying here and you apply this hack, you will be smiling on a monthly basis and on an annual basis. Now, and again, I must give credit to the authors of the credit card system, because many persons might want to attack the credit card system to say that the credit card system is an entire setup that keeps you in debt on a perpetual cycle. And that is not quite so. I have to represent those folks that created this, because they provide the information so you become an educated consumer of credit card. But you cannot blame the authors of credit card when they provide you with that information and the information is available and you refuse to access that information, either independently or by getting a mentor, a coach, someone who can advise you and help you navigate this process. But when you get into credit difficulties, when you start to get things like, negative reports, all right, derogatory marks, and it starts to affect you in a negative way, instead of you recognizing that you owe it to yourself to get information, to get educated about the tool that you're using, you made a choice now that you've messed up when you're using it to attack those who have provided you with the tool for you to use. So it's not the most clever thing for you to do to attack. All right? You need to ensure that you're putting yourself in that position of strength to get the information, to leverage the information to your advantage. So you are well on your way to start to build wealth. So I really trust that today's information was helpful as we do that deep dive, not only into the annual percentage rate or credit card and the annual percentage rate, but I give you a hack. And if you learn this hack, apply this hack the way that I just explained it to you, I said to you that it doesn't matter how high the credit rate, the APR is, it does not matter how high the APR is, because you know the information, you have the right information. Your use of credit card can be at 0% APR permanently. I didn't write the book on it. The authors for the credit card system, they have written the book on it. And they have written the book to ensure that you have the information. So you don't have to cry wolf when your backs are against the wall because you made a conscious decision that the information doesn't matter to you and you start to use that credit card. You need to get the right information. And the right information, as I said at the beginning, can save you stress and sleepless night. And the right information will get you on the way to start building wealth much faster. So I trust today's information on cracking the wealth code and filling the wealth gap was very useful to you. In the next broadcast, I'm going to be looking at credit card builders. And I want to say to you, don't want to miss this. It's absolutely necessary. So if you're joining this program for the first time, I want to encourage you to like, subscribe, and share. Press the bell so you will be notified when we open this room and these programs are out. You will be the first to be notified. If you know anyone who is in business or wants to know more about these systems that we're talking about, I want to encourage you to share it with them. Now, what I'm talking about here today, credit card and APR, the annual percentage rate. I'm speaking both to the rising star in business, and I'm talking to the average person who is just taking personal debt. And I'm saying this based on the fact that I am talking with so many young persons who are in business that what you do, you leverage your FICO score to start accessing credit, and you leverage those funding back into business. But of course, the nature of business, you have some unexpected things to happen, and one of them is late payment. And when you have late payment, several things happen. It affects the credit history, and because of the late payment, you're also dealing with issues like APR. Because once you get past your due date, there's no ifs and buts about it. The balance outstanding will be immediately subject to APR. All right. There are smarter ways in which you can do this. And later on, as time progresses, we'll talk about this. There's a difference between your FICO score and your PAYDEX score. And as an entrepreneur, while you're going to be maybe using your FICO for what we call the PG, the personal guarantee, you want to move very quickly into your PAYDEX because it's going to give you more leverage, and you're going to have more leeway in terms of business credit as against personal credit. So these are all issues that we're going to be going into over a period of time, and do enjoy. In 2023, we have a lot of work to do. So if you're joining me for the first time, my name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature. I'm the self-published author for several books, including 10X Branding and Marketing Blueprint, and I'm going to put a copy of that book at the top of the screen, and that's one of my books, and also Billionaire Codes. Those are just some of the books that I have written, and over a period of time we will talk more about those books. So I trust that you had a lot of nuggets to take away today, and remember to like, subscribe, and share, and we'll do this again tomorrow. Be blessed, and see you in the next broadcast.